Wells Fargo names one company a top pick, saying it has an excellent risk-reward valuation, even if its revenue were to be cut in half. And that name is Amex, American Express, outperforming its rivals in the payment space so far this year. Joining us now is Don Fandetti, the analyst behind this call. Don, it's good to see you, and we know they have a little bit, higher income demographic, but they are also exposed to a lot of small business, aren't they? And couldn't that be a risk factor?
Yeah, so, look, it's a good point. They do have a lot of credit risk. We just think tactically, from a stock perspective, it does make sense to stick with some high quality defensive names. The consumer, is in pretty good shape, has been resilient, but it is under some pressure from inflation and higher rates. And Amex fits that defensive category in our view. They have a very strong competitive position. As you mentioned, small business, yes, some credit risk. But they're also bigger than their next 5 competitors. They dominate that credit card issuing business. So some pluses and minuses, and it all ties back to a pretty attractive valuation, trading at around 12 times 2024 earnings. We think it should trade actually around 16 times, which is closer to a market multiple.
Is the beauty of American Express that its prime market is affluent, and affluent people are likely to survive so much better than less affluent people in whatever economy unfolds in front of us?
Yeah, so I think it's a good point. We do feel like their customer base will be more resilient. It is higher end premium consumers. But look, nobody's immune. I think one of the concerns we want to watch is it's essentially been a travel bonanza in the United States. And as we look at 2024, we do expect some moderation in that travel. And I think investors are, initially were worried about the low-end consumer, and now actually they're starting to worry about, the prime consumer. A lot of the job losses have been in the professional area. But we think net, Amex will be much more resilient. And, as we talked about the competitive position, they're effectively building a moat around that high-end premium consumer. They have a lot of high-end spenders, so companies want to partner with them, and those hotels and airlines co-fund a lot of those membership benefits and rewards. And so it kind of, that sort of virtual circle sort of feeds on itself, if you will. It's a moat.